All right, good afternoon, everyone. Today, I'd like to show you a tool I use to size up the 200 richest companies on the planet, look at some basic stats that help me understand where they are and where they've been, and then a quick way where I vet those 200 companies to see a pocket of companies that are intriguing to put money on. I'll start by showing my Morningstar profile that you see here. This is a free profile. You make an account and you actually add in stocks on your Morningstar. And so I have the top 100 companies here. And this is topped by market cap. So if I slide over, it's got it sorted by market cap. And this is the top 100. I dumped it, this 200 companies on June 16th, so a little more than a month ago, but it's still sorting it by market cap. So if a company came into the top 200 and one or two dropped, I'm not too concerned. I'm just looking at 200 very strong companies, and I want to size them up based on what they earn and what assets and liabilities they have to try and make a quick judgment and feel confident about putting some money on them and going about my day. So right now you see the top 100 companies. I'm going to switch to the second view, which is 101 through 200 at this time. I'm sure some of them have shuffled, but still it's a quick and easy where I have all these fantastic companies and a slew of stats. I'm actually going to go back to the top 100. And I'm just going to go across and show you some of the stats I have. So if I had any indexes, then the expense ratio, I always start with that. It's so important. This is the toll booth for your compound interest. So the lower the expense ratio, the better. Now, individual stocks, you're not going to get charged an expense ratio, but actively managed funds and index funds, they're going to have an expense ratio. Vanguard, not only are they extremely ethical, but they also have very low expense ratios. It's just an easier way to invest, and compound interest loves a small expense ratio. So I won't go through all of them, but it has the current price, the book value for the latest quarter, year in, and 3-year average, price to earnings for the past 5 years, price to book for the trailing 12 months, price to book 5-year average, price versus cash flow, price versus free cash flow for the 5-year average, earnings per share, trailing 12. And I'm just going to scroll it over some more, and you can see other things, current ratio, debt to equity, the market cap, which this is how this is sorted. You've got cash flow from operations, net income. So this is a real good tool. And all of this is in USD. One of my favorite parts about this is when you drop in a stock, you can put it in USD instead of its currency. Now, for American companies, that's not a big deal. But when you have one from Mexico or one from Canada, Europe, it can sting you, especially ones from maybe China or Japan. You can get real excited until you realize you're looking at a different currency. And so there's a bunch of great things. I'm actually going to put a list up here in just a minute in the order in which I have these set up. And so it can you can just pause it on that moment and set up your list. And the way I do that is I go to customize my list. And when I do, I'm able to drop in the different names and move them up and down. But again, I'll have to move this and let you see it. So you can pause it there, or I've got it on a screen here in a second. But I have it in a certain order, so that way I can apply a formula or two and quickly size them. But there again, after I use this tool and I apply a couple of formulas, I still go and look at Wallmine or Yahoo Finance, but Morningstar is pretty reputable, and it just holds all of this information without me having to do a lot of manual work. So what I do is I dump both of those views into Excel. So I export into Excel, and when it drops, I've already put it into a sheet, but it would drop down here and I would open it up, and then I would do the same for the other view. And so again, what I did, the only labor intensive was I actually had to, I got a list. A lot of brokerages will have like M1 Finance. They had all of the companies, if you want to add it to a pie, based on market cap. And so I literally just went and plugged in each one of these into this sheet. And now that I have them in there, every day it refreshes and gives me the information I need. So with that, I'm going to go ahead and move over to the spreadsheet. So what I did was I dumped that raw data into here. And so all of this landed, and I just added in 2 columns, these formulas that reference some of these lines, and I'll show you that. And so the first 100 companies were there, and then the next 100 companies, or from right here on, I just dumped right below. And so now I've got 200 very strong companies there. Again, it could have shuffled. Maybe there's 10 of these companies that have fallen out, 10 that are added. It's all good. This is a quick vet. I might add a couple 100 more companies, but for the most part, this is a quick and dirty, and I'll show you how I can quickly size up a company. But before I do that, I wanted to put this list on the screen for you. So let's see. It's a little smaller. That's all the way. It might, if it's small on your screen, I'm going to zoom it in, but that's the order in which I put all of the columns in my Morningstar, so it refreshes it. So I'm just going to zoom into that now, in case you're looking on your TV. Name, ticker, expense ratio, and we've kind of went through these. I'll kind of scroll it here where you can quickly see, and you can add these different ones in. If you search them, even if you put most of it, it'll give it to you. And then that last part there. So that's basically the list and the order in which I have them. And so I already kind of showed you this view. Again, this one is sorted by market cap all the way down. And it has all of those different data. I just dumped it straight in. And then I added in these columns. And so for price to book trailing 12 months times price to earnings past 5 years, the way I do that one is I times price to book, column L, trailing 12, by price to earnings using a 5-year average. 4 years, well, I use a lot, but since Morningstar already has 5 years in there, why recreate the wheel? So when I size up financials, sometimes I'll look to see if 1 year had a rough dip. If I can explain it, then I remove it. If not, then maybe I account for it. But that's the price to book versus price to earnings using a 5-year average. And so again, my goal is to get under 22.5. That doesn't mean a quality company doesn't exist if there's a big number, like you see Apple here and Microsoft, but there is brand value there for Apple and Microsoft that brings it more value than its book value, and its its earnings are strong, but for its book value. The next formula is price to book trailing 12 times price to earnings trailing 12. So Morningstar doesn't have a price to earnings for the trailing 12 that I can drop in. So the way I do that is, I'll scroll it over here. For this one, I times my price to book trailing 12 by the current price. I put it in parentheses, the current price divided by earnings per share trailing 12. And so that's basically simulating the price to earnings for the trailing 12. And then times that by the book value for the trailing 12. And I basically get two looks. I'm looking at earnings over the past 5 years and then the earnings for the trailing 12. And so my goal is to sort these and then size them up. Again, a lot of these companies still have, but there are some that I want to purely buy based on a quality filter. So after I have this and I've sorted it, it's naturally sorted by market cap. I copy this tab and paste it here. And so then I sort it by these calculations that we did. So instead of sorting it by the market cap, now I'm sorting it by this calculation. And I know I'm moving the screen a whole bunch, but now we'll get into the nitty gritty. So if I have a negative number on price on this formula, you know, I don't need to use it. So I sort this smallest to largest, and then usually if there's a 0, something's odd there, I might investigate it, but I kind of go with once I have a positive number. So for example, on this one, I highlighted from Citigroup all the way to US Bank Corp in green if it was less than 22.5, and then anything less than 30 I just did in yellow. And then I sorted this one next, smallest to largest. And again, the negatives I ignore. And I kind of went from anything positive higher than 0 to that 22.5, and then the yellow again in 30. And so doing that, I'll kind of let you just take a quick glance here. So I'm going to go back and sort by the 5-year, and I'm going to let that kind of drive, but I can reference the trailing 12. And I'm also going to freeze this pane here. So, like for example, Citigroup, if I look at Citigroup's calculation, their price to earnings 5-year average is a PE of 10, and their price to book, which their book value is about 102. I think on here it's got it in the 90s, but basically 0.53 price to book, and they're selling for 52. So, you know, somewhere in that high 90 to low 100 is their book value. Now, banks usually have a very good price to earnings. And so if you compare them to others, that kind of makes sense. And their book value can be strong, but a price to book at 0.5 really catches my attention. And so then if I look at the newest trailing 12, it's at a 3. So anyways, I do buy and own Citigroup. I bought it in the high 40s here just recently. Again, today the market popped, so the prices are a little higher than they've been probably the past couple of weeks. But you know, for me, Citigroup, I'm buying it. Now, granted, if you trend it over the past 10, 20 years, you'll see, you know, they were very high, I think in the 500 range, and dropped to 15. I'll show you a trend on them here shortly. So, you know, this isn't foolproof, but it's a quick way for me to say, okay, let me go investigate this company. This quick filter is giving me a scent. So Mitsubishi, which I do own a little bit of them, I'm looking for an American one. Now, Toyota, I know it's Japanese, but this one, great economics. I really like that one. I own it, so I'm a big fan. Goldman Sachs actually kind of surprised me it's there, but that's good. I'll go and investigate that. British American Tobacco, one of my favorites. If you watch one of the other videos, then you know I'm a big fan of British American Tobacco. So that one makes perfect sense. I know that the book value is pretty close to its current price, and let's just look at it to see. So price to earnings at 11, they earn a lot of money. Price to book 1.22 if you're looking at a 5-year average. And then their price to book 1.22. Oh yeah, we're using the same one, so that makes sense. But I know their book value at latest quarter 36, so pretty close to that 42, which actually popped up about $1 or $2 today. So they have a huge dividend. They use a lot of their earnings to pay a dividend. So I'm a huge fan of them. I'm not a huge fan of cigarettes, but I'm a huge fan of the concept of this repeat customer and how much money they make. Bank of America, I like that one a lot. It did jump up a good $2 to $3 today. And you see a lot of banks here for sure, which kind of makes sense because of that common PE value being lower. But there's some other ones. AT&T, I know they have a lot of debt. So when I saw that one, it was kind of interesting to me. So I'll go and size them up. And then Intel, I talked about that in the previous video. I'm a huge fan of them. At 35 and 37, I think it's an absolute steal, especially the deal they have with the government. So I'm a big fan. And Berkshire Hathaway, God's gift. I buy that one every day, and that one makes perfect sense to me. So now their earnings are impacted by the stocks they own, and so a lot of times if you ignore those and just look at their operating income, it tells a kind of a more consistent story, whereas the big swings are based on how their stocks move. So this video, I want to make it kind of quick, so I can dive into just one of these. Let's go to Citigroup, and then we'll call it. Okay, now we're on Citigroup, and you see the price around 52, book value 101, which has actually been climbing a little bit. You see that? Their PE in the 6 to 7 range. I'm still going to look at a 4-year, 5-year average. So I see their market cap at 102, enterprise at 95, which tells me they got more cash than debt. But market cap at 102 billion. So I'm going to come down here. Okay. So now we're looking at their profit margin. And what I see here for the year, you got 21, call it 22 billion net income. In 2020 is 11 billion, 2019, 19 billion, 2018, 18 billion. If I look at the quarter, this kind of tells me the story. Their earnings are getting, they're not trending up, but 6 billion that first quarter represented, 4.6 billion second quarter, 3 billion third, 4 billion fourth quarter. So, again, I'm the boss over my money. So if I want to look at it in a conservative lens, then I'm going to say 3 to 4 billion per quarter. Let's call it 4 billion, 4.3. I kind of like that. So that's 8.6. Let's call it 17 billion is what they're making annually, worst case scenario. So it'll be a little lower than this guy here. So 17 billion. Okay. And if I bring over my calculator, so we said their market cap 102.71 divided by 17 billion. I'm looking at 6.04, which is kind of where their PE is landing right now. So kind of being on the conservative side, I got a 6 there. Their price to book at 0.51. I think I had 0.53 on the Morningstar. Let's times it by 0.53. 53. So I got a 3 there, and anything less than 22.5. Again, it's not the holy grail, but it's a quick stress test that if I see Citigroup drop or rise, I'm okay. I kind of lifted the rock and looked under to see just a couple stats on them. And so I'm excited if they get cheaper. I think they're a fair price. Okay, so this video, the attempt was to show you a tool where I drop in a lot of companies. I have stats that I like to look at from free cash flow, earnings per share, and book value, and their debt, and their cash, market cap, a slew of other things, sector, etc. And once you set it up, it does its thing every day, so you don't have to worry about that. I do have stress tests. If I see something, maybe there's been a split recently, you know, just because it says the number there, I like to look at a couple extra sources just to strengthen my confidence. And so the example here was looking at Wallmine. But before I dove into this one, we put in a couple formulas to use that data from Morningstar to try to vet it to a little group of stocks that I can then go and investigate. So that was the objective of this video. I hope it helps you. Take care.